Good morning and welcome to this morning's trustee training session on impact management. This is the first in a number of trustee training sessions. We've got 4 going on throughout the autumn, so do please look out for future trustee training sessions. I'm pleased to say that this sessions we're carrying out in partnership with Social Value UK. On to today's agenda. I'll be starting off the session. If you don't know me, my name's Hugh Swainson. I'm a partner within Buzzercott's charity and not-for-profit team, and I'll be talking about impact and governance. I'll be followed by Ben Carpenter, who's the Chief Executive of Social Value UK, who'll be going into a bit more detail about what is social value. And then finally, we'll have Edward Finch, who's also a partner from Buzzercott's charity and not-for-profit team, who will be talking about the reporting side of impact. So let me commence with the first part of this session. And so on my first slide, we'll start by looking at the context of this. What is actually impact measurement? So this slide here is an extract from Bernardo's accounts, just a well-known charity I thought I'd choose, and I've just copied a bit from their sort of annual report onto this slide. So every charitable organisation will have a purpose, and ultimately that purpose in one form or another will be to make a difference in the lives of the beneficiaries of the organisation. And Bernardo's, in this example, have articulated that within their mission statements. So our purpose is to transform the lives of the UK's most vulnerable children and young people. They've then gone on the right-hand side of the slide. It's small print, but you get the sort of gist is that they've shown the outputs of the organisation. So, for example, they've done a map of the UK and where their work is taking place. They've also given some statistics about how many beneficiaries are using their services. So that's all really useful information. It tells you about the reach of the charity, how many people are using it, but it doesn't fully tell you about impact. Just because some of the work went in, in Leeds, it doesn't tell you how impactful that work is. So that's really where the web diagram in the bottom left of the slide comes in. Again, small print, but what this does is it looks at some of those differences that Bernardo's is trying to make in people's lives and tries to quantify them. So there's things there like family isolation, parental stress, mental health and well-being, and they've tried to quantify the responses on these areas that they're trying to make a difference in, both before and after the beneficiaries use the services of the charity. And so what that web diagram demonstrates is that there was a difference made in all of these areas where they're trying to make a difference by actually coming into contact with the charity and using the services, and therefore the social impact was made. So I suppose if you're someone who's new to impact measurement, it's worth having a think about being clear on what are the differences that you're trying to make in the lives of the beneficiaries of your charity, and then how would you go about measuring that? What questions could you ask the beneficiaries, or what data could you gather about their outcomes after using the services to quantify that? So over to the next slide, let's have a look at what the Charity Commission has to say on this. What are trustees' responsibilities in connection with impact? Well, the Charities Commission frames all this around the concept of public benefit. So to be a charity, charities have to deliver work for the public benefit, and they've got a whole series of public benefit requirements. And so I've set out some of those on the left-hand side of the page. So it all looks at things like ensuring you're delivering the charity's purposes, managing the risk of harm to the beneficiaries, and making sure personal benefits are no more than incidental. So it's not done for private benefit, it's for that public benefit. This is expanded in some of the Charity Commission's guidance. If you're not familiar with Charity Commission guidance, they've got a whole number of guidance documents on their website. They all start CC and then a number. So CC3, the Central Trustee, talks about this. And then that goes on more to talk about looking at the charity's purposes that's set out in the governing document, what the charity does, and being able to explain that to its supporters. So you can see the way the Charity Commission is framing this is making sure that that public benefit exists. You can't be a charity without this public benefit existing in the organisation. What we're going to talk today about around impact measurement and impact management is subtly different to that. We're not just talking about the existence of public benefit. Obviously, attempting to measure impact helps you identify that public benefit exists. But what we're looking at further to that is all about optimizing impact. It's about sort of managing it, getting the most value for money, all of that side of things. So on this side, we're looking at the demand for impact measurement. So why do people actually measure impact? There's a lot of reasons that we need to produce impact information. So, for example, we do it in our annual accounts, or there may be other reasons like grant funders or social finance providers or contracting authorities that want us to produce impact information, or just the general public. So all of these reasons will create demand for impact measurement information. But a lot of the theory around this says that really the core demand should come from internally in the organisation, so coming from the board and from the management team and programme staff. So really what we're looking at here, if we compare this to the organisation's finances, which is something I'll do a few times within this session, when you look at finances, there are lots of reasons why you produce financial information, such as to produce it in your annual accounts, to maybe get a bank loan or something like that. But actually the core in producing financial information is all internal. You want it to be able to run the organisation, to be able to make financial decisions. You have those management accounts and everything to do that. It's really the same with impact measurement. The core demand for it is usually internal, to make sure that you can understand the impact that you're achieving for beneficiaries and to manage that, and then that gets produced in different formats for different stakeholders of the organisation. So on my next slide, we look at some of the opportunities and challenges with impact measurement. So firstly, just to look at the challenges slide, and we've spent a lot of time speaking to people about what they think about impact measurement, and we'll come on in future slides to look at some of the attitudes towards impact measurement. But there is definitely a feeling out there that both this has huge opportunities, but there's also risks that impact measurement can be something that doesn't provide enough value if you don't do it in the right way. And so some of the challenges around impact measurement are whether this information actually changes the way management deliver the services. So will having this information actually make anyone do anything differently? Are any decisions actually made off the back of this? So will the board actually make any decisions based on this impact measurement information? And sometimes it's the output information, such as how many people use the service, and just knowing that it does provide benefit. Is that enough without going the extra step and having that information on impact? Because there is a cost to all this, undeniably, to gather all this data, to do surveys, and to analyse it and look at it. So if we're going to invest in that cost, it's got to be meaningful. There's got to be decisions that are made off the back of this information. So I think if you're someone looking at impact measurement and management within the organisation, it's well worth being aware of these possible pitfalls, because if it's not integrated into the organisation and it's not useful for decision making, for refining services, then potentially you're not getting the best value out of it. But there are undoubtedly huge opportunities. So at its best, impact measurement can help the board make sure that the organisation is delivering on its purpose. Charities are there to deliver a social purpose. Impact information can help refine and help ensure that you do that. It can help management refine the organisation's work. It can engage stakeholders in the work that you're carrying out. It can even make organisations more resilient. And I suppose that's because by looking at impact measurement, you naturally work closely with beneficiaries and get their views, and therefore you're closer to their needs and can make the organisation more efficient, more resilient as a result, and can even grow funding as well by engaging other stakeholders. So on my next slide, let's look at some of those sort of views from the sector on impact measurement. What we've got here, you'll see on the left hand side of the slide there's a 2017 graph, and on the right hand side there's a 2020 graph. So We did a survey back in 2017 to look at attitudes towards impact measurement. Before this session, we sent around a little survey to the group, seeing what people's views were. They're not entirely comparable, so I wouldn't try and compare the data as a trend because they were different groups, but it gives us an overall picture. So what we're seeing on the first question here, how would you describe your knowledge and awareness of impact measurement? Well, generally people do have a fair knowledge of impact measurement. There's clearly there a sort of feeling that people could know more, and there's be valuing more knowledge of impact measurement, but generally people are aware of this area. Over on the next slide, we look at how useful this information is. Generally the consensus here, the majority of people thinks it's essential to the organisation, or if not, it's still desirable to the organisation. So the message we're getting here is that people are aware of it and think it's important. So I think really here we can see that impact measurement is something important to the sector, and it's here to stay. On the next slide, we looked at whether this impact information should be a goal in itself. Perhaps a slightly ambiguous question on my part, but what we're looking at really is that is there value in doing this stuff sort of internally for the organisation, and without it being sort of driven by funder requirements or something else. And the sort of consensus seems to be it is valuable to do this. And on the next slide, we just looked at what is a bit more detail really on what it's important for, and one thing that was encouraging here is that people thought it was crucial to develop the business and the services that are provided by the charity. So that's encouraging that people are thinking actually this is useful for what you're actually doing and not just communicating with various stakeholders. Interestingly, the importance to the board was slightly more spread, so it wasn't as crucial for the board. So that indicates there's some way to go in making this really crucial for decision making at board level. And that's reflected again on the next slide, which is the survey that we sent around in advance of this session. A similar trend there, and what's crucially important for impact measurement. So an interesting view of the sector. Over on my next slide, we look at the concept of running a healthy business versus running a healthy charity. I think we all inherently know what it takes to run a healthy business. You have to sort of manage your risks, have good financial management, controls over the organisation, deal with compliance, monitor your outputs, and making sure you're delivering on all your KPIs. So that creates a healthy business. But within a charitable context, obviously you need to have all of that. But that doesn't necessarily mean you're achieving your social mission successfully. So to have a healthy charity as well, we have to have all the things around sort of the theory of change, understanding what we're trying to do for beneficiaries, those case studies, that impact information. And on my next slide, I go back to comparing this with the financial side. So if we took an organisation's finances and how the board oversees finances, we have a number of things in place. So, for example, we normally have a finance committee or maybe a treasurer that is responsible at board level for overseeing the finances. We have management accounts and report KPIs. We challenge the information that's given to us on finances. We have someone responsible at management level, say a finance director for dealing with this. We have controls, processes. We even get those assured to make sure we're getting good information. And we have business plans and forecasts. Now, each of those boxes you could translate into impact measurement. So who is responsible at board level for overseeing this impact? What information do we get as a board for scrutinising on impact? How do we challenge that? It's often easier to challenge financial information than it is impact information. Who's responsible at management level? Who's accountable for this? What processes do we have? And are we confident they're good processes and the information that we're getting on impact is good quality information? And how do we plan around this in the future planning? So all these things can translate. And over onto my next and final slide before I hand over. I did an article in Pioneers Post. We did a series called Fit for the Future. There's a link to it on the slide there. But what we looked at, sort of 5 areas boards could look at around impact. The first one's fairly obvious: understanding your impact. To achieve results from impact measurement, obviously the first step is to really understand what you're there to do and what impact you're trying to achieve. What are the changes in people's lives you're trying to achieve? And the next point is clarifying a strategy around it. So you know what you're trying to achieve, but how is it you're going to get there and achieve that? Have you articulated that clearly? And then in terms of impact measurement, it's then getting that right skill set in the organisation. Do you have people in the organisation who can produce this information in a reliable way? Do you have the skill set within the organisation to scrutinise that information as well? Do you have then, number 4 here, the reporting mechanisms? Have you got a clear method of what information goes to which board meetings, a cycle of reporting around this to make sure that that you are keeping things accountable? And I think that accountability really is the 5th point as well. So have you got a framework of accountability around impact, and is that within the culture of the organisation to keep things accountable? And make sure there's that continuous improvement. And finally, one message that we've had from a number of sessions on this is about keeping it real. So this is back to the information is really only valuable if you're making decisions off the back of it. So I think what I'd encourage is, if you are gathering data and trying to measure impact, make sure that it's being driven by a desire to actually utilise the information. It's not just done for its own sake. There's actually a demand behind the scenes at the board level driving this and saying, well, we need to make decisions, therefore we need to have information around this in order to make those decisions. And that kind of demand for that impact information should help keep it grounded and relevant for you, so that it's valuable into the future.
So what we're going to look at is really, Hugh's talked a lot about the principles of gathering good information and using that information to help run your business. This session really is around what to do when you're looking at communicating the results of your findings externally. So a lot of the time when we talk about impact management, impact measurement, we draw analogies with the accounting processes, as Hugh's just been doing. And I think as he's emphasised, the key thing is that data is useful for making decisions about how you run your operation, how you improve over time, how you make decisions about which activities are best pursued and which maybe are less valuable to your organisation. However, that information also is useful in delivering your public accountability. So in the case of financial information, your annual report and accounts and the kind of information you put in that. And as it happens for charities, a lot of that information around public benefit, around the goods you're actually delivering against your objectives, is required as part of your annual reporting. So I'll look at some of the issues around what you might include in your annual report, and the Charity Commission very much encourage some information around impact in annual reports, and how you might package that up, similar to the example that Hugh gave right at the beginning. So the kind of things to include, really, if you want people to understand how you're measuring your impact, Hugh talked about the theory of change. So your view on how your organisation delivers change in the world, what it is you want the world to look like after you've been involved, and how you believe you can get it from where it is now to where you'd like it to be. You need also, though, to look at, if you're going to use and report information, whether that information is a reasonable set of data to be basing any kind of assertions and conclusions on. Those of you out there who are accountants will recognise these kind of things we're talking about here. So completeness of the information you're using, whether the sources of the information are valid, and whether that information itself is properly collected and has sort of internal integrity. So moving on to the next slide. So in order to achieve that kind of process, what you really need is some kind of system in the background for collecting data, and then processes for aggregating and interpreting the data. For a lot of simple impact measurement activities, where maybe you're looking at a fairly simple project, you might collect data in a simple database that might even be an Excel spreadsheet type thing. However, for more complex organisation-wide collection of impact data, there are these days plenty of systems out there that operate a bit like a financial accounting system might, that can collect quantitative and qualitative information and keep it in one place, but also enable you to aggregate and sort the data so that you can produce reports that summarise what you're finding out about your organisation. In terms of the kind of reporting you might want to deliver, again, Hugh mentioned the different stakeholders that you might want to report to, and ideally, if you're setting up a system, it would enable you to provide information to the people on the ground that would enable them to know whether they're achieving objectives that they've been set and whether their progress is on target, for example. It would enable management to spot difficulties in the business, so there'd be dashboard type information so that people could see whether the underlying drivers that you think deliver your impact are happening and take action if things need tweaking. But also, and this is the bit that I'll focus on, for external reporting. So the kind of stuff you might include in your reports and accounts, the kind of information that we believe is useful and interesting to external stakeholders. So going on to the next slide. As I said, the Charity Commission encouraged this information to be presented in your annual report. This is just a brief extract from the charity SORP's requirements on the content it expects. For larger charities, there's more of an expectation that things like progress indicators, KPIs, those kind of things might be used, but also that charities are encouraged to use impact reporting as part of their external accountability. And impact really is the ultimate sort of measurement of whether you are achieving public benefit or not. What they do acknowledge is that it's not necessarily simple. But the key to any kind of reporting really is to link up between the pieces. So in SORP particularly, there's an encouragement to link the narrative about what you've been doing, how you've been what you've been achieving rather, and how that matches up to your objectives, to link that to the numbers you're reporting. So to talk about the same activities, for example, across the words and the numbers, but also to look at the costs involved in delivering the different impacts you're achieving. And that kind of linkage is very important. Also, though, to look at the broader other governance processes that are in place. So particularly one thing that we've talked about a lot in the last year or two is looking at impact and delivery of your public benefit objectives as part of your risk management. So we tend to focus on organisational threats, financial threats, things like that, and not think so much about what are the things that would actually make us less effective than we could be and would stop us achieving the amount of impact we'd like to. But also linking that to your reserves policies, your viability, your going concern. One of the things that came up very clearly from the kids company collapse, for example, was that running an organisation on virtually empty in terms of reserves created a huge cliff edge threat for beneficiaries, so that if the organisation fails suddenly, then all your beneficiaries could be left in the lurch, and all of a sudden you're actually causing great harm to them rather than any good. So building your vision for how you achieve the most social impact into that wider governance framework is pretty important. And just at the moment, I think a lot of people might be looking back or even forward. Who knows at the moment how long this is all going to last, but a lot of organisations have had to reconfigure the way they try and achieve their impact, their public benefit, and a lot of that's been done through organisations maybe going online and becoming digital and telephone based, whereas they used to provide face-to-face kind of services. And I think it'll be interesting to look back at whether actually some of the changes that have been made are delivering the same or better impact with less resource needed to deliver that impact, and whether in fact some of the changes that have happened as out of necessity because of COVID might actually be better retained as the way forward in the future. And there was a big move towards adopting digital models in the sector anyway, and COVID maybe, as we're doing this thing on Teams, which we've never used before COVID kicked in, it has actually pushed a lot of us to do things that we probably were planning to do in the next few years anyway. So moving on. So in terms of the way you might report things, this and the next slide are both extracts from, it's a little old now, it's a few years ago, but it gets the point across. from Great Ormond Street Hospital's annual report. This first one, and I think you'd have to have very good eyes to be able to read anything on that slide on anything other than a wall-sized screen, I'm afraid, so sorry about that, but it really just sets out the theory of change of the hospital. So the things that are put in, having a hospital building, having skilled staff, the right kinds of equipment and supplies, etc., all those things that are needed to run the hospital. Then it talks about the processes that the organisation applies, so the way it works to make sure that it achieves the best it can. So it's got things like quality improvement there, it's got the governance processes, etc. And those processes then create the outcomes of the organisation, which in turn, in the longer time frame, create the impact on the people who come through the hospital. So that's quite a technical, if you like, approach to presenting the theory of change, the background to how the impact is achieved. But then the next slide shows what I think we all intuitively know. That no amount of technical information actually beats some personalised examples of what the charity achieves. And I think the difference between explaining pounds and pence accounting, where really all you have to do is demonstrate a bank balance at the end of the year or show a profit or loss and a decent balance sheet, explaining impact often is only really brought to life by telling individual stories of how people worked to produce very specific outcomes. So I think here what I'm saying is, whilst there are lots of technical ways we can put numbers around impact, we should also make sure that we're not forgetting to tell the stories, although telling the stories without backing it up with a bit of data is a little empty. So moving on to the next slide. This one's one I've shamelessly pinched off somebody else's session in something we were doing with some mature social enterprises the other day, but this really shows where the value of those kind of numerical approaches to impact reporting are. I think there is an inherent difficulty in trying to compare different organisations or even different projects within the same organisation by putting numbers on things, because the things we're measuring are usually so subjective and we have to pick which ones to measure and which ones not to measure. However, what this does is shows that an organisation, this is the Now Group in Northern Ireland, that they, by using the same method of measuring their impact over a number of years, have been able to show that consciously collecting the data, consciously acting on the basis of the information that they've received from that, has enabled them, using the same methodology, to increase the impact expressed as a number that they've achieved over the years. And I think if you're looking at ways of reporting and why you might report, probably measuring and managing impact is more about the long time series sort of improvement of impact than trying to compare yourself with other people. And I think that kind of approach is quite powerful. So that's a little bit of a view on how you might report your impact, just some examples of the different ways organisations might go about that. Going on to the next slide, I thought we could just quickly look at, and being an auditor, I'd be remiss if I didn't think about how we might do it, to look at that whole area of assuring the impact. So Hugh mentioned a few times that when we're looking at other types of management data, if it's financial data, we've got external and internal auditors crawling all over it. If we're buying and selling businesses, there'll be due diligence processes involved, looking at not just the financial data, but also other things about the other bits of information about the organisation. And if organisations are going to try and trade on the back of their impact data, so are going to try and attract funding, whether that's in terms of commissioning from public sector or investment, or just simply make a case for being a product that people might buy because they prefer, in much the same as sort of fair trade coffee or whatever, to buy socially responsible products, that the information that they're putting out there about their impact should be credible, and in that case that it's worthwhile maybe looking at whether we can build some processes for assuring the data. I think there's a bit of scepticism about the kind of claims that some charities make in their annual reports, that there are numbers and statistics that appear that come from systems that aren't really talked about in the report. So how do we manage people's natural scepticism about the kind of positive claims people might make without balancing that with other information? should we be, where trustees are making specific assertions in their annual reports, should we be looking at a process for validating some of those assertions, and somebody in the same way as us as financial auditors might assure that the figures are materially correct, that the other kind of impact related statements are in some way materially correct and appropriate. And in that case, should there be some kind of a standard or approach for people making those assurance statements to follow? So we've had a few ideas around that. So we've trialled bits of work with some of our clients in this area. And going on to the next slide, we think the benefits of looking at assuring some of this impact information fall really into two categories. So that there is and it's the social value framework setters rather than me as a self-interested auditor that makes this claim, that there is a value to having an independent assurance to the outcomes of any kind of measurement exercise. That there's a feeling it might help with commissioners buying into the claims that are made, and it also, I mean, one of the main points of any kind of assurance process is to detect error, or in the worst instance, deliberate manipulation of data. But also, on a much more positive note, as with your relationship with us as your financial statement auditors, there's the kind of process around what in old money we used to call a management letter, we now call a post-audit report, which is really looking at ways that an organisation can be continually improving. So rather than just giving a pass or fail opinion on information, looking at ways that it can be done better going forward, spotting ways in which maybe the data that management are pulling together is flawed and are helping correct it before it gets out into the outside world, being that critical friend and providing an independent check to help the organisation continually improve what it's doing. So moving on to the next slide. Looking at the way that impact might be assured, we see there being really three different types of assurance that might be applied and added together. They might give a sort of overall assurance on the data, and it'll really depend on who we or someone was providing assurance on behalf of. So one type of assurance is to confirm that the methodology that's being applied conforms to one of the standard approaches to methodology. Although it's more often the case these days that the people who develop ways of measuring and managing impact work on a principles-based approach rather than a strict methodological approach. There are still sort of slight differences between different approaches, and it may be of value for someone to confirm if somebody says, for example, that they've produced an SROI measurement that has been produced in accordance with the principles that Social Value UK promote. There's the more mundane but very important matter of confirming that any model that's been used actually works. So that might be that the mechanics of a system for collecting and aggregating data actually mathematically and otherwise give correct results, that if you add 1 and 1 you get 2, but also that where you're putting in multipliers, etc., that they're not being duplicated, etc. So that just mechanical confirmation that the process of taking raw data and turning it into a summarized and aggregated picture is accurate. And then the final type of confirmation is a confirmation that what's being presented as a summary or a conclusion from the data is an appropriate and reasonable set of conclusions given the data and the results of summarization, etc. If you added those three together, you'd get something quite similar to a full scope sort of audit of whether the impact methodology was appropriate. More often, people are likely to be doing one piece or another out of those three. And on the next slide, we look at an example of a case study of a piece of work we did with one of our clients. So ECT, working with the London Community Transport Forum, wanted to produce something that community transport organisations could use, and there are community transport organisations up and down the country that generally run pretty similar services, and this kind of approach will only work in that kind of environment. Often they'll run community minibuses that are available to local groups to use, for their own purposes. They'll also run trips and services of their own. They may run dial-a-ride type services around the local area, but the general gist is that their business is arranging for people to be transported from one place to another, often to particularly participate in some kind of public benefit type activity, but maybe just purely for leisure type activities that they find difficult to access. So taking people sort of older or frail, those kind of things, getting people to their doctor's appointments, those kind of things. And the principle was, if you find a way of looking at the social value that different types of journey deliver, and you record the numbers of those different types of journey, then you should be able to produce an overall picture of the total social value created by the community transport charities activities. And they produced a toolkit which contained a very detailed guide telling people how to use the toolkit, but also a comprehensive Excel workbook that, if you put in inputs from your record of the number of journeys of different types you carried out, would then produce valued up quantified picture of the type of social benefits that those journeys were creating. For example, taking people to the doctors reduces the number of hospital visits, and there's a value to the NHS in that. Or something like taking somebody on a social trip, they looked at what the price of a cinema ticket might be, and the value that that kind of activity created. So moving on to the next slide. So when we looked at the toolkit with them, we really only covered, in terms of our explicit reporting, the mechanics and logic. So we didn't feel we were competent to make decisions about whether the relationships they were drawing between hospital admissions and GP attendance were correct, and we could see that they were the right kind of issues in principle to be building into the model, but we didn't report on that. We did discuss with them those kind of issues about whether they were appropriate, but we didn't feel competent to report specifically. We would like to, at some point, look at further issues about how the data they collect and then put into the model is correct and complete, but we didn't look at that in this particular instance. In this case, we reported that if you put certain types of data into the model, then you got out information which did what the toolkit said it would do, and summarised in the way it should. We were happy for that to be used in the toolkit. There's a statement saying that we've checked those things out, but in the background we also had conversations with management about little things we found as we were testing the model that they improved before the final model went out, for example. And just moving on to, I think we should be near the end of my slides. So how might this work in the future? So I think that the first kind of assurance under a recognised framework, there are various types of framework out there in housing, in health, where there are very well recognised ways that there are sets of data for proxy sort of financial values for different interventions that might be made. So it would be possible for somebody to assure that the set of values that people are putting on their different impacts are in accordance with a recognised framework. It also, though, would be entirely possible to look at organisations and look at the data they're collecting, much in the same way that we crawl over your order books to check that all the sales you've made have made it into the accounts. We could look at how organisations, for example, in community transport, collect data about their journeys and whether actually we can demonstrate that the record of the journeys is complete and the descriptions of the journeys is accurate, say. So being able to do that kind of thing would then enable us to look at individual community transport organisations, but across a sector like community transport, and there are others that we could think of that have relatively standard set of services that different charities provide, then you might be able to start to aggregate up the impact of whole sectors, which would be an even more powerful thing, perhaps to go to central government or others with, to argue the case for wide-scale funding for a whole sector. So we think there's, in terms of the actual frameworks and the reporting, there's a lot that charities can get from reporting and using the information to persuade those who might fund them, to enable management to manage their organisations better, but also to make the case in general for the whole of the charity and social enterprise sector being a better place to be doing business with if you want to deliver those broader social benefits alongside getting basic contractual requirements of public sector delivery done.
Hi, my name is Ben Carpenter. I'm Chief Executive of Social Value UK and Social Value International, and here I'm giving you a short presentation which gives you an introduction to the social value movement and Social Value International's framework for accounting for value. So first of all, Social Value UK is a membership organisation here in the UK with a mission to change the way the world accounts for value. And that mission is shared with our parent organisation, Social Value International. And our mission is really to broaden the definition of value. We believe that for too long now, the accounting profession has just focused on financial value. And in the 21st century, we need to broaden that definition so that when we're accounting, we have an understanding of the environmental value that our activities create and the social value as well. All of that brought together in a broader definition of value will allow us to make decisions that reduce inequality, environmental harm, and hopefully improve our well-being. And so Social Value UK and Social Value International advocate a principles-based approach to accounting for value, and I'm going to touch on that today. And we work across the world to apply these principles, develop a community of people who are developing practice and hopefully shifting power in the way we make decisions. Just to set you in the context of the movement, the UK is one network currently out of 25, and this is growing month by month. So this really is a global conversation. All over the world, people are coming together to form these networks, adopt these principles, and develop practice. And as well as being geographically diverse, we're also a membership that is diverse in terms of sectors. So we have the private sector heavily represented, businesses looking to account for their value, as well as the public sector, governments, local and central, to are keen to understand the social value of their decision making. And of course, civil society organizations, charities, social enterprises, other non-profit organizations are also part of our membership and networks. So I hope that gives you a good introduction of who we are. What do we do? Well, Social Value International leads the development of methodology and standards, and Social Value UK contributes to that. We also convene a lot of conferences and events to bring people together to discuss best practice. And we also deliver a lot of training in social value. And the third piece that we do is advocate for assurance and accreditation on these principles. And here you go. We've been established since 2007. We're an open governance structure, membership led. So please get involved and be part of this movement. Some of the partners and organizations we've worked with, again, showing the diversity, some public sector, sort of organizations like the OECD or the United Nations Development Programme, right through to sort of business networks, the World Business Council for Sustainable Development, or ANDI, Harvard Business School, and corporate reporting initiatives such as integrated reporting, GRI, and so forth. So yeah, diverse mixture of partners and projects. Do get in touch if you're interested in working with us. But let's have a little think now about what is social value. We've talked about it for a couple of minutes, and in truth, there isn't one single definition of social value at the moment. There's a number out there. So here's how I like to describe it. Firstly, we can look at it by process of elimination. If we think about the triple bottom line of, people, planet and profit, the profit, economic value, that's captured pretty well through financial accounting. Changes in money and transactions, and the balance sheet is been around for 400 years now. So that's pretty well established. But what the balance sheet doesn't capture is environmental value. And those changes that we create in natural resources are starting to be accounted for through sustainability reporting. In the last 20-30 years, businesses and organizations have got a lot better at understanding the impact they're having on the environment. So social value, I suppose, is the things that aren't captured in the two above. It's the changes we create in people's lives that affect our well-being. Now, obviously, there's overlap there with, some changes in money for people, and changes in natural environment will affect people's well-being. But there's also some intangibles there that are going missing. And so social value and social accounting is trying to capture those other changes in people's well-being. And here is Social Value International definition in that it's about people experiencing changes in their well-being. We call those changes outcomes. Some of those changes are more important to people than others. So understanding that relative importance and quantifying that relative importance is what social value is. We're trying to say this change in someone's life is much more important than that one. And if we can quantify it numerically, that gives us ability to make better decisions, that this change in a person's life is 3 times more important than this change. You may have heard of social return on investment, that's SROI, and that is using financial proxies or monetization to quantify that relative value of outcomes. Here's a slide which looks quite intimidating. It's titled Aspects of Wellbeing. And what you can see is a plotting of various aspects of well-being from different well-being frameworks that exist out there. There's enough academic research around well-being to show that there's good convergence and consistency in what these aspects of well-being are. The OECD, European Quality of Life Survey, New Economics Foundation have taken from their frameworks and just shown the overlap. And in the top right-hand corner, you've got some material changes to people's lives that affect well-being. Those materials are around having enough food to eat, physical health, our bodies, shelter, do we have a home, the environment, and of course money as well. That feeds into our well-being. Do we have enough income or earnings to sort of support ourselves? If we move around the slide, you can see some relational aspects to well-being around social capital or our relationships with people, our agency and connections. And this is obviously a clear theme for our well-being. As we move around further, it looks at skills and actually more subjective aspects of well-being, about how we feel about our lives, how we're functioning, our self-esteem, our optimism, our work-life balance, outlook on life. So there you can have a kind of picture of all the different aspects of well-being. There's not one list that you'll find anywhere, but there is consistency and convergence on what those things are that matter to people. And we believe if these aspects of well-being, these outcomes or changes in people's lives, are the ones that we need to be measuring if we're to improve people's lives and people's well-being. Quick word on social return on investment, as it's a phrase you might often hear. Well, SRI is a framework for measuring and accounting for this broader concept of value. It uses monetization and financial proxies to quantify that relative value of outcomes. And yeah, we just like to call it a framework of principles, not a tool, because there isn't one size fits all approach to doing an SRI. These principles can be applied in a proportionate way. And here are those principles, the ones that we build all of our work around, our training, our events, our methodology. There's 7 of them. The first 5 are accounting principles, and 6 and 7 about transparency and verification and more around reporting. I won't go into too much detail now on all of them, as that's a longer webinar or piece. But if you are interested, I recommend you read the flyer that we have available, as these put together provide the framework you need for making better decisions. Better decisions, we say, for innovation. If you collect data by applying these principles, you will have information that will put you in a better position to improve your services. Involving stakeholders, understanding the changes that they experience in their life, understanding what really matters to them, what's important. This is all data and information that will help you be innovative to maximize the social value that you're creating. But of course, the other reason to put in place this framework is an accountability framework. And we really have realized that these are 2 sides of the same coin. If you are accountable to your stakeholders, then you are constantly innovating and trying to maximize the value for them. But it's important to pause on the accountability point and recognize that accounting for value is about being more responsible and accountable for your actions, particularly to stakeholder groups that cannot hold you to account. And there's groups of people that have relatively little power. And so accounting for value must recognize that power imbalance and ensure that the framework gives more of a voice or amplifies the voices of people that don't often get heard, people whose lives are affected but cannot hold organizations to account. So accountability really is a core part of the SVI framework. Those principles are fantastic, and you should definitely take time to have a look at them. But if you want something which is a little bit more tangible as well, in terms of or what data do I need to measure and manage my impact or social value, then here's a good list. And we've come up with these 10 questions which really complement the principles. And so these impact questions can be found in all approaches, because you may have seen that there's a number of different tools or approaches out there. And you'll find that most of them will answer some of these questions. Ideally, you'll be able to answer all of these questions, but that might take time. And that's okay. So the main tip, I suppose, is start answering some of these questions, and over time build up your ability to answer more of them and involve stakeholders, the people who experience the change, in answering the questions. Some of them you will recognize as being similar to theory of change. What is the problem you're trying to solve, or what is our proposed solution? Particularly useful for social purpose organizations. And then there's more qualitative data and questions around who is it that experiences changes in their life, and what changes are they? Now, those are really important questions. And once you've answered those questions well, you can then measure quantities and amount of change that happens. And there you'll see questions like how much change has happened, how much of the change is down to us, how much is our contribution, how long do the changes last for, how long should we measure it for, and what is the relative importance of those different changes. Answering all those questions will give you a really rich data set that will help you make better decisions. So social return on investment is an approach that we've been leading on since 2007. There's lots of resources on our website about having a go at SRI. The guide is available to download for free. Some of our resources on our website. And of course, we do training and assurance around that as well. So it can be quite a technical exercise, but it can also be done in a way that's proportionate to your resources. And let's not forget that whilst it may feel like a technical exercise, really what we're trying to address is inequality, as we said right at the beginning. It's about accountability and providing more of an opportunity for people whose lives are affected by our decisions to hold us to account and to tell us how more value can be created. So just to finish then, I've mentioned training. It is a core part of what Social Value UK do, and many accredited trainers around the world will be able to deliver training courses such as these 3 on the slide, which actually are tiered at different levels for people at different points on their social value journey. Accreditation and assurance services are crucial to that journey and learning and progressing both as an organization and as an individual. There's a range of different services on this slide, but you can read more about that on our website as well. So we have the Social Value Management Certificate, which looks at systems and processes in place within an organization, and that's a really good pathway for organizations to start embedding these principles and good practice. We also provide assurance for reports, training courses, other guidance, and software tools as well. If you're interested as an individual to become a social value practitioner, we have these 3 levels: associate, accredited, and advanced, and they can be something that you develop throughout your career as you demonstrate good practice in relation to social value, measurement, and management. And of course, there's opportunities then to become assessors of reports and trainers after that. There's loads and loads of resources on the Social Value UK website, so please feel free to browse those and get in touch with us if there's something you particularly need. Also, projects such as Inspiring Impact have lots more information, so do let us know how we can help you. Social Value International also has a lot of resources in a membership area with lots of previous webinars, videos, and a practitioner zone full of other useful resources and opportunities to learn off other practitioners around the world. So that brings an end to this short presentation. I hope you found it informative, useful, and are inspired to join us and be part of the social value movement. Thank you.
First question I'm going to look at just follows on from, I think, what Eddie was talking about around risk management. So the question is, can you tell us more about how in practice people utilise impact in risk management?
I think an hour point is that really maybe they don't and should. I think inherently that there's an element of looking at it in risk management in that obviously a charity failing means it fails its beneficiaries. A social enterprise shutting up shop means it stops doing good, etc. I think what I would like to see that we don't see often enough is when people are looking at their risk assessment, they tend to look at two elements of risk. They look at a sort of probability axis, which is the same whatever kind of factor you're looking at. So this is just really how likely is this to occur. They also then look at what, ironically, they will often call the impact axis, but that tends to focus on the financial impact. So often charities in their risk registers will express impact in terms of the degree of financial loss they might suffer if a particular thing happened, for example, or look at risks in terms of ones that might mean they had to stop operating or run out of reserves, etc. And I think I would like to see more of those analyses of impact actually saying what are the things that would lead to us achieving less of the public benefit we would like to achieve. So if this thing happened, what are the things that would happen that would curtail our ability to serve our beneficiaries, if we're that kind of charity that serves beneficiaries, promote the good that we do, etc. And too often at the moment, I think impact is looked at as a financial dimension in risk management, and it would be relatively easy, and I haven't got the slides with me, but for example in affordable finance, for example, the traditional way of looking at whether you should finance people is to do a credit score on them and assess the impact of, or to assess the likelihood that they won't pay you back. If you're looking at actually the impact of some people not being able to get credit in society means that they're even more excluded from society and they're even poorer. So our public benefit is to increase the ability of people to access credit in the first place. Then actually it's not just a case of a simple credit score, it's actually what would stop us being able to provide finance to the people that we think should have access to it, rather than a simple computer says no approach to a credit score, for example. So building in that kind of element of what is our social purpose as well as what is our financial risk in this situation.
And just to follow on from that, I think just say sort of anecdotally, we as auditors see a huge volume of risk registers for all sorts of charitable organisations, and it is surprising how few really actually mention the risk that the organisation isn't achieving what it set out to achieving, what it's setting out to achieve for beneficiaries. So, and that can come in all sorts of shapes that might end up being the result, but there's very few risks we see on risk registers which say, oh, actually we might not end up being able to do what we're setting out to do as a social organisation. So it is worth, I suppose, challenging yourself on that. So, you know, does something like that need to be on our risk register? We've had another question around, should boards have a subcommittee to focus on impact measurement? And this is something if I was to start off on this, this is something that we have seen in some organisations. They'll have some sort of an impact subcommittee, which is effectively like delegating the finances from the board into a finance committee. Is just having a committee to really sort of invest the time and have the focus on impact, and then they can sort of report up to the board, who can then review things at a more of an overview level on impact. So it is something that some find useful and helps to sort of drive the conversation on this. I would say from my own perspective, it probably depends very much on the charity. Similarly, how you know, for example, smaller charities may have a sort of treasurer rather than a finance subcommittee. You might not expect a smaller charity to sort of set up a whole separate committee on impact, but we have seen some starting to look at that kind of thing.
I think I'd start from the perspective of a different question to ask yourself, and that is, how many public companies have a finance committee? And the answer would be none. So I think in a charity that really the whole business of the board should be about maximising the public benefit that the organisation delivers. And maybe, yes, a committee to look at impact, but it would be more analogous to something like an audit committee. So a committee that would look at what's our process for making sure the information that management and the board get about impact is rigorous and is properly checked and verified, and that the processes are appropriate to make sure we've got good decision-making tools. But the decision-making and the consideration of impact in a charity is the whole purpose of the organisation, much in the same way that for a PLC, the whole purpose of the organisation is to generate profits or asset increases for the shareholders. It shouldn't be, but that's a different day's discussion. So therefore, the whole business of the board is around finance, and it's the audit and the process stuff that gets pushed off to a committee. In a charity, I'd want impact to be at the heart of the main board, but maybe something more like an audit committee that looks at the processes for how the information's delivered would be appropriate.
Okay, I think that's everything we have time for today. As I say, further details of upcoming trustee training sessions will be issued shortly, so do look out for them. But really, thank you to everyone who's joined today, and enjoy the rest of your day. Thank you.